Hello, how are you? Are you all excited? Some of you must have thought, oh my, he's so short. Anyway, thanks for coming. Welcome everyone. First, let me say that in these 2 days, I'm going to try to change your ideas about the world of stock markets in a way that may be a bit extreme. So when you leave through that door tomorrow, you won't be the same person that arrived with the same philosophy about the market. Okay, so I'm going to talk simply about human beings. What happens to us as human beings? What do we really do? That in such a simple game, because you can buy an asset, a share, and you can go up or down, how come it's something so incredibly simple? And 98% of people lose, while by normal statistics, 50% of people should win. So what happens for the majority of people to lose? I understand that if you're here, it's either because you lose or you want to improve your results. So, how does it go? Well, the main thing is, there is something inside us called the ego. Egomania, egocentricity, egoism. It is the defense of the I. It's that we believe that we know it all and that we are better than the rest. The ego is what defends us. So in traffic accidents, only other people get killed. It can never happen to us. So cancers just happen to other people, but not to us. All right, that's the ego. It's the protection of the I. It's useful for lots of things. Some of us even think that we're never going to die and stuff like that, right? It's the defense of the I. We think we're more attractive than we are. We think we're younger than we are. We can't help it. But this ego, this egoism, is no use to us for investing in the market. It's great for lots of things, but no use for investing in the market. And I'll give you a very clear example. We buy a share at 10, and if we're right and the share goes up to 11, what do? We sell it. I've gained 10%, wow, and in just 2 weeks, bish bosh. I buy them low, sell them high. Hey, the professional way. It only took me 2 weeks. A bank only gives me that in 20 years. But me, look at me, it's a doddle. Now I'm just going to play the market. I'm going to leave my crappy job because this gives me a lot more. I gained 10 in 2 weeks. So if you do a quick calculation, it's 200, 300 a year. But no, it doesn't work like that. The point is, we bought at 10, we sold at 11, we gained 10%, and we even invite friends round for a drink or for lunch. But then we buy a similar share at 10, and this time it falls to 9. Oh, for Christ's sake, to 9. Well, I don't know, they told me it was a good one. I read info. Well, no problem, we carry on as normal. And suddenly, one day we look, and it's at 8. Son of a bitch, at 8. How come? It's because I haven't checked. I'll load an application on my mobile to check it more. Maybe it'll fall less. Yeah, the paranoia is tremendous. You put an application on your mobile, in reality, to piss yourself off even more. Because the more it falls, the more it bothers you. And one day, it falls to 5. This is incredible. How has this happened to me? You go to bed and, let's be clear on this, if at some point you're in bed and you spend more than a minute in bed thinking about the market, then there is something you're doing wrong. In the market, well, the bed's for sleeping. Okay, well, for whatever. But you shouldn't think about the market. There are people who don't sleep thinking about the market. But this guy bought them at 10. They've fallen to 5. He doesn't stop thinking. We all have an Einstein within saying, I've got the answer. Tomorrow morning I'll fix it. The answer is obvious. You've bought a piece of crap. If it's gone from 10 to 5, if you've asked a kid if it's rising or falling, 10, 9, 8, and so on, take a kid and ask them, come here, what's the next number? And the kid will tell you. The kid's not attached to anything. The kid will tell you 4, and you say, rubbish, it'll be 6. You have no idea. But the point is that at 9 in the morning, he arrives at the bank, the broker, He calls them, and this man took a decision. We all know what's the correct decision. You made a mistake. Get out now. But this man doesn't do it. What does he do? I call this way of ruining yourself the turbo way. That is, the guy arrives and buys more. He's already bought crap. And he buys more. He says, no, now I have them all at 7.5. No, you bought a piece of crap and now you've got double crap. Right, the guy's share drops to 4, 3, 2. At 2, he has the idea of calling a friend with money. And he says, buy this share because I'm telling you it can't fail. Okay, you call your friend to see if your friend buys shares and stops the fall in this way. But it doesn't work either, and the share ends up at 1 and 0. Look, okay, there is no mathematical formula. Then we can use, that's when I win this, and when I lose that, and I end up making money on the stock market anyways. It doesn't work like that. But the ego doesn't want to lose, because when he bought at 10 and it fell to 9, he says, if I sell, I look stupid. At 8, I look really stupid. At 5, I'm a hopeless imbecile if I sell. Well, as soon as you realize you're stupid, the better. Because we're not God. We make mistakes, and we're going to make mistakes. So the key point is, when I'm right, I'll try and get up here, and when I'm wrong, I'll try to be wrong just a bit. Because look what this person did at 10. The first person, we just saw what the second person did, but the first. What do you think happened in this person's mind at 10? When the share rose to 11, and he sold it. Let's see if we're stingy. The ego is very stingy. Do you know what we all think when we sell at 11 and gain 10%? Let's hope this crap sinks now. I'm already out. You can sink it now. Because our dearest wish is for it to sink. Because we're not in it anymore. But the bastard ego goes further. Do you think he's finished with it? He keeps on checking. 12, you bloody sod. 13, how can it be? I'm no longer in. 14, bloody son of a gun. If it gets to 20, don't mention it. And if it gets to 30, he says, I'm a hopeless imbecile. And when it starts to fall, 30, 28, 26, now I buy it. 24, 22, 20, and it's always the same story. It doesn't matter if we make a mistake. What we'll do is, when we buy a share, always put a stop on it. The stop is, when it is less than this, sell it. And we don't need to look at the market, or a mobile application, or a computer, or anything. Do you know how they define an addiction to stock markets in the US? Checking the markets 3 times a day. Because that's just ridiculous. Businesses don't change like that. They issue their results every 3 months, and looking at anything else is nonsense. It keeps idiots entertained. And there are plenty out there, really, believe me. Look, there's a simple way to understand this. The 2013 winner of the Nobel Prize for Economics, Robert Shiller, will tell you that 50% of the time the market goes up and 50% it goes down. Do you know what that means? It means that if you follow the market every day, and it bothers you when it goes down, and you have 30 years left to live, you will have 15 bitter and 15 fruitless years left. And when you get home, you go, bloody stock market. I don't feel like having dinner. For something that you can't control. The stock market. What happens out there on the financial markets doesn't depend on you. The only thing that depends on you is what shares you buy and when to place the stop, not the future movements. But you know what? Future movement in the long term is easy to learn, really easy. The only thing you have to calm down is the ego. You have to calm down your mind. 90 to 95%, of our brain activity is unconscious. Only 5 to 10% is conscious. So, I'm going to tell you a secret. Anyone who invests in the market and loses is using their unconscious mind. They get carried away by impulses. They don't think. They act, but you have to think. First rule, never invest when the market is open. If the market is open, it's not the time to decide what to buy and what to sell. You should decide much earlier. We'll try to win the battle against our unconscious mind with our conscious mind. Our unconscious mind will want to do certain things. Our unconscious mind is able to... If everyone stays still, I'll give you an example. Look, please, don't move, okay? Your unconscious mind does this. It's making you guys keep your hands down there. And I don't want to know what you're doing. It's making you have your hands in exactly the same position. Let's see. You two here, can you look at each other, please? No, don't move your hands, please. Can you see yourselves? You're in the exact same position. You three, you've all got your arms crossed. I mean, let's see. You two, exactly the same. Look at you three, the three with your hand covering your mouth. The question is, we cannot control these gestures. We cannot control our unconscious mind. Our unconscious mind sees things which we are not aware of. How many times has it happened that you have the feeling, for example, a very simple one, that someone is watching you? Or someone comes along who you have never met before, and suddenly you feel bad. You get a bad vibe. And something else from our unconscious mind, and I'm sure it has happened to all of us unconsciously. We're having a normal day. We get home like we do every day, and we get to the front door. We put the key in the door and suddenly you say, I need a pee. Did I need it seconds ago? No. But now at the front door, yes, I need a pee. It's okay, you say. It's okay, it's not that bad. You walk in and call the lift. Oh God, I really need a pee. The lift comes down. You press the button. You start unbuttoning, you say, I hope my neighbor isn't there when the door opens. And you make it just in time. You almost always get there in time, although there are times when... But you make it. And why does this happen? Because your unconscious says, I'm home now, I can let it go. I was holding it and I didn't say anything, but now we got home. So the fact is, we cannot defeat the unconscious mind. It's impossible to win the battle. You'll want to do things by impulse to get what it wants. This ego, our ego. I mean, let's see, we always have this desire to be on top. It's the others who are always wrong. It reminds me of the joke about a man driving on a motorway. He calls the police and says, a car is driving in the wrong direction, officer, on the A3. Not only one, no, 2, 3, 4, all of them, all the wrong direction. We all have to look at ourselves in the mirror. Because maybe we are the problem when we lose on the stock market. Once in an interview, I got a real pasting because I said, and I stick by it, that the market never ruined anybody, that the financial markets don't ruin anybody. When people complain, no, but I lost everything. Sorry. Unless it's a case of fraud like Bankia or something like that, or preferential shares, I'm talking about financial markets. Nobody put a pistol to your head to make you buy a stock, or to make you buy more than you should. Nobody put a pistol to your head so you don't place a stop order, or to stop you getting out at a value. It's all down to you. If you want to blame somebody else, well, that's fine. But you have to be humble. And I dare to say one thing. To win on the stock market, you have to be a good person. The kind of person that in life is capable of quickly owning up, saying sorry, it was my fault. Sorry, it was me. People who in life are able to quickly admit their mistakes are the biggest winners on the stock market. Because it's okay to make a mistake. But let's make it even easier. We won't operate when the market is open. We won't watch daily fluctuations because we might become addicted. By the way, stock market addicts, rehabilitation clinics are cropping up all over the world. And something else that has already started and will keep getting worse. The addiction of young people to online games, betting sites and so on. It's getting worse and worse. In the past, addicts were 50 or 60 years old and were often alcoholics. Not today. Today, these are youngsters, 18, 20, 22 years old, who have transacted or played, even when they were minors, by falsifying signatures or IDs, and so on and so forth. Let's try and think intelligently. I'll tell you something. If you've read my books or you've seen any of my conferences, you'll know this. I watch the stock market, and I've watched it all my life, as if it was life, not as a stock market. What's life like? What's the street like? What's in the streets? Because in my town, 25 years ago, I used to go, and a video club appeared. A new video club, and another video club. Thinking of a businessman or entrepreneur, to be more precise, the thinking of an entrepreneur. So I opened my video club. Why? Because they work very well, because they're trending now. They're opening for a reason. So I opened my video club. For 5 or 6 years, it makes money. And then suddenly a video club closes. Then another, then another. Thought process of the loser. Let's see if they all close. And I'm the only one left. If they all close, it's for a reason. So you have to be quick-witted to go into business, as well as to come out in time. Because if you don't come out in time, you'll lose in 2 years what you gained in 6. If you don't come out in time, you'll beg a loan from the bank. If you don't come out in time, when you finish the bank loan, you'll beg from the family. When you finish the families, you'll burn through your friends. And all for not accepting that the business has finished. But the problem is that you think it's your fault. But why? You think if I close, what will they think of me? If I close, what will my family think if I close? That I'm a failure. That I ruin everything I touch. What will my friends think of me when only 2 years ago I bought a new car because it was all going so well? And now I have to close. That I'm a compulsive spender. That I can't handle money. That I'm jinxed. What will the neighbors think? If they come down and see the business is closed, when they see me in the street, what will they think of me? Poor bloke, what will become of him? What will he do? Look at his sad little face. But do you know what? Now forgive me for being so gross. They can all go and shove it up their arse, because they'll believe it about you whether you like it or not, regardless if it's true or rubbish. So in this situation, you have to be honest with yourself. The business doesn't work. You close it as soon as possible. The sooner the better, and on to the next business. No problem. I got 4 or 5 good years from it. Great. You don't have to be a genius. Take a kid. Even if you don't want to give him a number. At 3, he'll tell you if it's going up or down. Son, will you kindly tell me the truth? Is it going up or down? And maybe he says, it's crap, Daddy, crap. However, you see one going up. And what will the kid tell you? Daddy, it's going up. And if you don't want to take decisions regarding the market, do me a favor. Ask your son the question. Ask your nephew. Ask your grandson. As he'll see the truth. The problem is that human beings don't see the truth. We just see the truth that's convenient. Because a person who has bought crap, it doesn't matter if it's at 10 or 15, and when it's at 5 or 4 or 3, they open Google. I'll see what they say about this company. You'll read 100 news articles, 98 bad, 2 good. And which ones will the brain like, right? The egoist. You know the ones it likes. The 2 good ones. All the rest are wrong. But look, this is very simple. When we spot a share is going up, we'll say it's going to continue going up, but I mustn't watch it every day. I can't go to the stock market to play to see if it's moved up or down this morning. Let me repeat, companies issue results every 3 months. Therefore, why spend time on it? Entertainment for idiots. Someone sent me a leaflet once that said, if you want to keep an idiot entertained, I swear this happened to me. I don't remember who the bastard was. But anyway, if you want to keep an idiot entertained, turn it over. So I turned it over. And guess what it said? If you want to keep an idiot entertained, turn it over. And this is the stock market every single day. And forgive me, I know that it's not what the media channels and many analysts and many funds and many others, asset managers, brokers, would like to hear. But this is the reality. You don't have to stuff your broker's pockets. You buy a company because it's a good company, and that's it. And that's it, because if you've got a company, it's just a company, nothing more. I mean, it's not worth. Inditex can't be worth from 1 week to another 3 or 5% more. It doesn't make sense. It's the same company. And if one day it's worth 1 or 2% more, what difference does it make? What we try here is, when I do badly, I lose this, but when I do well, I win that. And to make the profit that you mentioned before, to make a 30, you need some of them to turn out bad, and some to gain 100 or 100 and more, to compensate. But what we are not going to do today is to buy businesses that are not profitable. What is the fastest way of knowing if a business is performing or not? Well, very easy. Is it going up? Or going down? It's as simple as that. Because the banks lived their glory days in the 80s and 90s when interest rates were 15%, at 10%. But now, in Europe, and interest rates at 0. And they're losing all these legal claims. It's as simple as that. Look, in the 80s and 90s, they made a lot of money. You just had to enter a bank, and they gave you 2 frying pans and a bathrobe for entering. Then, in the noughties, they were more stingy. You might take a few sweeties, but now they give you a biro, and it's tied to a string. All the legal claims they've been losing, whether it was for floor clauses or preference shares, whatever, and now things have changed. It's all these new banks on the internet that offer the same, but much cheaper. So that's it. It's over. Let's see. And during the Industrial Revolution, when the first tractors came out, everyone took to the streets. Agriculture was supposed to be on the brink. Everyone was going to lose their job. Right, so if the banks are finished, they're finished. Do you know that the average now is about, watch this, how many people? Can you raise your hand who's not been to a bank in the last 6 months? Can you raise your hand, please? Look at this. It's more than half. But there are applications now where you can withdraw money in any store you like. In the local greengrocer, you can fill your tank up and at the same time get cash at the petrol station. I'm not going to waste my time going to a cashier. That's right, the world is changing. Now you can pay with your mobile. You can activate or deactivate your card with a mobile. And now we've got these companies that are called fintech, financial technology, that are beginning to take over part of the market. Look, I'm taking on currencies. I'm taking on card payments with PayPal, for example. So, you see, they're all taking a bit and leaving them nothing. All they've got are costs like that. That's it. Another example, a company of a kid that with $1 million was able to gain 10 in its first year. And then, El Corte Inglés, 90,000 employees, all this prime real estate, 75 years of history. They both go public, a kid's company and El Corte Inglés. We're all sure which company will rise and which will sink, aren't we? I'm not sure. You don't know? El Corte Inglés is in ruins. That's why it has to go public, although statutes say it mustn't go public ever. Of course it'll end up floating on the market. Companies normally float because they either want international exposure and they offer 8, 10, 12% of the company, or because they need money. El Corte Inglés used to be like the internet before. You went in and they had from car wheels to clothes and even fresh fish of the day. They had everything. Another example. Toy shops all over the world are going bust. Just 5 months ago here, do you recall Imaginarium, the shop I used to enter through the small door? It went bust. Arrangement of creditors, a nicer name for it. And just this week, Toys R Us has gone bust. How is it possible that with the volume of toy sales increasing by 6.2% in the last year, the toy companies are going bust and closing down? The physical ones. And it's simply because there is this company called Amazon that has changed our purchasing habits. We're willing to wait a while. So to buy cheaper. I mean, before you'd go, you'd buy, you'd take it, but now you're willing to. Hey, I've seen it. I'll buy it on Amazon today with a click. When you're already registered, you buy with just a click. Nothing simpler. And tomorrow, it's delivered. Zara has set up something in Valencia, a pilot. I don't know if it'll take off or not, where you buy the item and you don't take it. You go, you try it on, but you don't take it home. You buy it and in 2 hours or the next day, it's delivered, all nice, neat and folded. So then you have to reinvent yourself. Either companies grow or fall on the stock market. A company that keeps its market listing will be sunk because they know it's next to fall. So you must adapt to the times. If we're now changing our purchasing habits, we're now able to pay in different ways. So there'll be lots of changes in all sectors. What happened to the travel agencies 15 years ago or 10 years ago? Since we're now capable of doing their job ourselves at home, searching for the hotel we fancy, the flight we fancy, we now do the work they used to do and charged for, and in turn, what we get is that it costs me much less. Well, the travel agencies can go to hell. And this has happened to many sectors and is happening continuously. And so continuously, we must expect these changes. We can't have a share to keep it forever. No, but don't just keep it for a week or two. Let's try and be consistent. We're going to buy a share when it's moving up, and when the trend is finished, I get out, and that's it. And how do we spot that a trend is occurring? Well, look. I'll put it as simply as I can. And that is, here. Is it more expensive or cheaper than ever before? Is the company more expensive than ever? Yes or no? Yes, it's more expensive than ever. I'm interested. Someone smarter than me, with more money than me, more knowledge than me, is investing in it. Because for a share to move up, it needs money. Don't forget that it needs money, because you have to buy it and retain it. Let's see, has anyone brought a financial newspaper? Nobody brought one. Okay, I have one. I'll hide its name so no one can see it. Okay, I like that. So, you can't see it. This, some people say, this is marvelous. Has anybody ever felt the financial orgasm? It's called financial orgasm. It's real. The name exists because it happens. It doesn't last long, but it happens. A financial orgasm is, for those who've not experienced it, I'll tell you how. And tomorrow or later you can go and do it and freak. Maybe it's not so great, but well. You buy a newspaper with this color. Important. You buy it. You fold it. The first time you do it, just the first time, you fold it with the name outside. So everybody can see you. And now you have to walk briskly with swagger, as if you've paid the mortgage, you know. And you have to greet as many people as possible. Hello, Antonio. See you, Roberto. How are you? And you notice something and you go like, this and me are going to make a great team. I won't understand it at first, but I'll persevere, and I'll learn. Folks, this is no good for making money either. And let me tell you something. If I were in another country, I'd mention other shares, but since we're in Spain, without knowing the shares in your portfolio, I'll tell you which ones you have. You have Telefonica. You have Santander. You have Repsol. You have Iberdrola. And someone will say, the bastard. Yes, he's right. Of course they own all the media companies in our country. What do you think they'll sell? Another company? No, they'll sell their own. And they have the nerve to sell you a company like Telefonica that in 2000 was worth 32 euros. And what it's worth now? 9. 32, 9. 17 years of falling. No, but it's got the highest market capitalization in the country. No, it's not like that. Folks, open your eyes. Let's be honest. How much was it to send an SMS? About 15 cents. How much was it to send a photo? Hello. €1, right? You wouldn't send that funny one, eh? For €1. How much was it to send a video? No idea. At this rate, 1,500, 1,800 euros. How much does it cost today? Free. Where's all this money they were earning? Because in the end, the share price is a reflection of the real company. Well, of course they still have the calls, and especially international calls. But a year ago, or just over that, the gravy train stopped as well, because now you have WhatsApp to call for free, wherever you want. Skype. Do you remember Skype? How long have Skype got left? Well, just a few years. Why? Because WhatsApp has it all. We can do video conferences seeing each other for free. Do you remember Messenger, those chubby emojis that used to spin around? Do you remember? That was the WhatsApp on the computer. Imagine what that company would have been worth. I don't know, 10 billion? Because we were all connected. Do you know how much it's worth now? Now, it's worth 0, because it's gone, doesn't exist. So we've got to be really fast at adapting. A guy comes along with verbatim. Verbatim. Do you remember verbatim? CDs company. CDs manufacturer, right? And everybody goes crazy, eh? Recording music, recording movies. We didn't used to buy them one at a time. No, packs of them. 25, 50, 100. Like crazy. And the finance minister at the time, Montoro, said, hey, You're going to burn something to it, right? Of course. I'm not going to leave it empty. Don't kid me. Well, if you burn something to it, then a tax. I don't want to have it empty. Yeah, but a tax. But it's like a tax they levied years back in London. That depending on the size of your windows in your building, you would pay taxes for the sunshine. Is that ridiculous or what? Who knows where on earth they get these taxes from? In my town, they've imposed a tax for having a dog. That's true. You have a dog. 50 euros a year for wearing out the tarmac. Incredible. And if they had bear's claws or something, or if they see them with long claws, it'll be 100 most probably. But this verbatim, to give an example, goes public and goes up, and buys machinery. And now instead of making 1,000 a second, makes 50,000 a second and machinery. And then a kid comes. 2 years later, invents a pen drive. And CDs are over. The thing is, the machinery was to be amortized over 20 years. 20 years! In 20 years, CDs will no longer exist. And suddenly, the company does... Before, a company would last 50 years, not today. Now they call statistics the Gauss bell curve, which shows how a business performs over time, and the curves are getting narrower. So that's why we have to be really switched on about what I get into and when I get out, because the two things are important. Therefore, the first question I always ask myself is as simple as this. Here, are all the winners in? Only 3 of you know this? Here, we've got all the winners, and I don't care if they bought a minute ago, a month ago, 6 months ago, or 2 years ago. I absolutely don't care when you bought. You're winning, and you know what? I like to join those who are winning. Because here, you find the 2% of the winners. And what I'll do is I see one, and I go, bam, and I get in. So, going back to what I was saying, the broadcast media, the newspapers, when I picked it up, I said, don't pay attention to them, because they talk a lot of rubbish. Like the market has fallen because there's been a lot of sellers. Well, there's a surprise. Or the market has risen because there's been a lot of buyers. Have you ever read or heard it? Do you know it's false? It's impossible that happens. Every day there are exactly the same buyers and exactly the same sellers. Never are there more buyers or more sellers. It wouldn't be a stock market. If the volume of a traded share is 2 million, it's because there are 2 million shares bought and 2 million shares sold. How has there been more buyers or more sellers? And then the other people who've bought crap shares. Look, Jose Antonio, I have here. Okay, they don't go up, but they give me a dividend. The dividend! Do you know what a dividend is? It's the oldest fraud in the history of the stock market. It's another way of entertaining idiots. The dividend. Let's see. The dividend is part of the company that is distributed between the members, the shareholders. If this company is called Atril and is worth 10 euros, and I take out €1 in money, how much is Atril worth now? 9. Perfect. I won't ask anything more. Add, take away. But we're good at least. We're good. It's worth 9, and supposedly they've given this euro to me. Do you agree with me? Rubbish. It's rubbish. They haven't given it to me. The broker wants a nibble. Well, as I had to do this, I want a nibble. And someone else wants more. The Treasury, which automatically withholds it. At 19, 21, 30 in the United States, in every country, or 25, every country, Italy, Germany, every country at the applicable rate, and they keep raising it. So yesterday, I had a company that was worth 10 euros in my portfolio, no taxes. And today, I've got a company that's worth 9, and I've got 60 and something cents in my account. In other words, yesterday I had 10 euros, and today I have 9.60, 9.65. How come the only people who pay taxes are the winners? If I bought the company yesterday, how is it possible? In short, if the company does this every day, or every week, or every month, I'll end up paying taxes that they haven't paid. Because 97% of the companies in our country are in tax havens and don't pay taxes. And why do they allow this? Because they're going to pay dividends that all of us will pay for by buying these crap shares. Warren Buffett doesn't buy shares that pay out dividends. And we're talking about the best investor in the world. So if he buys shares that don't pay out dividends, it's for a reason, because he says, no, keep your euro and acquire another company. And next year, we'll be worth a lot more. And with that, you gain, buy another company, because that way neither of us pay taxes. We simply get something that grows and grows and doesn't pay taxes. What he does, he defers the tax. It's called technically deferred tax. So, therefore, why is it that this company pays a 3% dividend or a 5%? I don't care. Even if you put a 25% tax on it, you are taking it from the share price. What used to me is a company that was worth 32 euros and is now worth 9, even if it was the best one in Spain. Therefore, be careful about what we read, because it could do us a lot of damage, because it can put an idea into our heads that is dangerous, and even worse, that is not true. Because the story that only winners pay taxes is false in the stock market. The story that the dividend is for you, so how lucky to have a company that pays dividends, that's another crock of shit. And we could carry on like this. Look, then there are others. There are others like financial analysts. Have you ever heard any of them talking on the radio, on the television? Yes. Nice tie. Crystal ball? They have a crystal ball and people ring them, and they say if it'll actually go up or down tomorrow, or it'll do this or that. From now on, you can call them radio comedy. And listen to it, but carefully. You'll hear them repeat many times words like, most probably, I think that, certainly, if it's not that, then the other. See, nobody knows the future of a company. So if you're ready, let's play our first game. Okay, let's start with you. I want you to tell me a share, okay? Whose share price? You know roughly, approximately, it can be anywhere in the world, okay? Whichever you want. Técnicas Reunidas. Okay, Técnicas Reunidas. What's their business? They make oil pipelines. Okay, right. Do you know the price? About 40. Shall I guess? 39.86. I've made it up. 39.86. Okay, and I'll also make up a day. Let's say yesterday. Or look, it'll be The 3rd of March, 2019. Okay. There we are. It is the 3rd of March, 2019. And the time will be 12:14 and 16 seconds. And we're going to stop time. We stop the time, okay? We stop because the share price is continually going up and down and moving. Everyone clear? Técnicas reunidas, 39 and 86. We're at this day and this time, and we've stopped the time. Good. Group B, I'm going to split you into 2 parts. I want Group A to tell me 5 things that can make the share price go up or down in the next minute. Second, day, month, or year. 5 things that might happen, okay? 5. A terrorist attack. In the next second, a terrorist attack. Will it affect the share price? Yes or no? Hello? Yes, it'll affect the share price. Correct. Okay, a terrorist attack. Give me more. A reduction in costs. Well, maybe it's a good or bad thing, and if it's reducing, we'll soon see why. Okay, more. It can go up or down. Come on. Wang Chung-won fires another missile. He's got balls. There he goes. Will firing another missile affect it? Of course it can affect it. Give me more. A contract. A rumor. An idiot's rumor. Be careful, an idiot these days has a say in everything. So then, a rumor on the internet. On this company, good or bad, okay. It can make it go up or down. Yes or no? Yes, of course. Come on, one more. A change in legislation. Perfect. Come on, Group B. First part, come on. Things that might happen. A change of government. More. An oil discovery. More. Signing an important contract. More. A natural disaster. A tsunami. Like what's happened now with the catastrophe bonds, which have fallen 16% in one day with the Irma thing, right? Was it called Irma? More. A sex scandal. Okay, with the chairman, though. It's not going to be an employee, right? Okay, come on now. 5 more. Inflation. We don't really consider this here in Europe, but in almost all the countries in Latin America, they don't need books to know economics. Why? Because they have extreme inflation of 30, 40, 50%. Even the smallest shop knows they have to keep on increasing the prices. The job of the central banks is to control inflation, period. That's all. Nothing more. Come on, more. Over here, a merger, a change in the board. Come on, one more. Catalonia gets independence. Has anyone come from there? Good, the last ones. The last ones are thinking, damn, they've already said what I wanted to say. But in reality, the reality is that there are around 15,000 variables that might affect the pricing of a share. Come on, last 5. Pardon? Electric cars drop in price. Perfect. It'll have an effect, of course. More. Now with the electric companies, I say, what I think is, if energy isn't created or destroyed, what the hell are these companies charging me? If someone says they're shafting me putting up the electricity price, buy their shares and the problem is solved. Very good. More. Pardon? Press conference with Draghi. Draghi opens his mouth. With Draghi opening his mouth, we're screwed already. Come on. More. 2 more. Tax increases. Better or worse results than expected. No one in the world knows what the market will do tomorrow. That's it. Forget it. We don't need to know what the market will do tomorrow. We don't need to know it to make profits. That would be a game, having fun, and in the stock market, we have people who have fun and lose, and those who get bored and win. You choose. You may say, what a jerk. You have to choose because making money on the market is very boring, super boring. You don't have to do anything. Just buy a good company and that's all. You stick with it, of course. Why would I sell it? It does well. How is it possible that General Motors has in recent times fallen 20%, selling 10 million vehicles a year? And a company that sells 60,000 cars a year has gone up 1,200%. Tesla moved up from 20-something to 400, almost 2,000%. How is it possible? One sells 10 million and the other 60,000. What growth chances has the one selling 10 million? None at all. They're not going to sell cars on Mars. However, the one selling 60,000 has orders for 600,000. So they can go building factories out there because they have orders for 600,000. So in the stock market, what is it? Reality or future expectations? Future expectations. What future expectations does it have? Forget reality. Reality is not interesting. Reality no longer helps. Reality is old. I need to know what will happen in the future. Will it grow? Will it go further? Will it stay the same? Because, folks, do you think that electric cars globally will grow or fall? They'll grow. So, let's look for electric car companies. Look, if you've been to Japan or to Holland and seen the elderly going around on mobility scooters, those electric ones, right? And you think, Jesus, are they all ill? You see them around the supermarkets on their scooters. And then you see the bastards get off. Grab a pack of 6 bottles of water, 2 at a time, take them back to the scooter, and off they ride, balls out. They have a blast. So we will end up having it here. When I see these things, I go, where? What companies are they? What companies are they? Because they're growing. So we need to. What is it? Open your eyes to the streets. And then we go and see it in the stock market and we invest if they're at a maximum. Do you think drone companies are going up or down? Hell, let's search DJI. Let's look for companies that make drones and let's see if they're going higher or lower. It's as simple as that. What I'm not going to do is buy something that is already finished. Tesla, as the case with Tesla is, and I mentioned them before. This company says, let's see, you use the car 4% of the time. I'm able to drive myself. What you're then going to do is you'll say to the car, okay, at 8:30, you pick me up, you take me to the office, and at 2:30, you pick me up again. And do you know what the car will do for 24 hours? Carry people around and monetize your vehicle. But of course, keep in mind that we're talking about technology. Let's not be the first ones. We jump aboard a trend while it already exists, while it's already going strong. We don't want to. We don't want to innovate. We don't want to be the first. To sum up, there are loads of people in the City of London and on Wall Street that are going to work for us. Why? Because they're already working on picking the good companies. They're already working on picking the company with high future expectations. They're already working on finding out where to place their money. So the only thing we have to do is copy them. When we see a share at maximum, I'm in. And when they get out, I get out. And so that's what we're going to learn. Where are the ones who win and when they quit? And we're not going to do anything else. The rest is just paranoia in our head. I think that most probably, surely, it will be this one or that one. If I said, how many people here are able to buy shares that are worth more than 10 euros? Well, there'd be a few people. But if I said how many people here are able to buy shares that are worth more than 50, there'd be fewer. If I asked how many would buy shares that are worth more than 100, there'd be very few left. And if I asked how many are able to buy shares worth more than 500 euros, $500, £500, probably no one would raise their hand. But do you know what? Cheap or expensive doesn't exist in the stock market. It only exists in your head. To picture this, let's look at this example. Imagine this share that's worth 400 euros. Do you know why it's at 400? To prevent you buying it. That's why it's at 400, because they don't want any minnows in it. So everyone thinks it's expensive. Perfect. And the share keeps on going up and up and up. And one day, it's worth 1,000. €1,000. I have one share, and a letter arrives to my home and tells me, Dear Jose Antonio Madrigal, as a shareholder of, thank God they put it in singular, as a shareholder of our company, we're pleased to inform you that on the next day, X, for every share that you hold, we'll give you 100. Bloody hell, to me, why? I'm off now. I won't read more. I'm off. I'm off to a party. Invite my friends. Wow, guys, they're giving me 100. Then I get home at night. I read it properly. We will. For every share that you hold, we will give you 100. And also the quoted price reduces by 100. I don't understand. I've got a share that's worth 1,000. I don't understand. I wait until Monday, and they do something called a split. They split it. And I get to Monday, and I view my account, and I've got 100 shares, but I still have 1,000 euros. Why? Because they've reduced the price to 10 euros. I mean, now the share is not 1,000. Now it's worth 10. But I have 100 shares. I mean, before I had a share at 1,000 and now I have 100 shares at 10 euros. How much money do I have? The same. I've got 1,000 euros. But what happens when they fall to 10 euros? What does everybody do? They buy. Because they think it's cheaper. Our brain thinks poorly at times, mistakenly. Therefore, cheap and expensive doesn't exist. So then some people will say, okay, so what's happening? The share has gone up here and falls down to here. No, come off it. It's much easier than that. It's much easier. The quoted price is split. I mean, 10.01 is more expensive than ever, right? It's at a historic maximum, and so the chart stays exactly the same. But everybody says, at 1,000, no, but at 10, yes. Therefore, from now on, it's the same to you, whether a company is worth 1, 3, 33, or 300. If it's good, I buy it and put a stop. I buy it and a stop for when the trend changes. Therefore, folks, a stock market winner 100 years ago, do you think, would they be a winner today? Of course they would. And they'd be a winner in 3,000 years producing UFOs. Today, the only thing computers have done is increase the speed at which people lose. People lose faster. They used to have to go. When I started in the stock market, you had to go to an office to buy and sell. 25 years ago, if you made a phone call, you went at the end of the week to sign the trade slips. This business with buying and selling by mobile, that's now. So a winner 100 years ago would be a winner today, and in 3,000 years. It's a psychological matter. A matter of you can or can't. It's a matter of, is it logical or not logical? Is it simple or complex? Because the stock market is very simple. The problem is that there are so many entities that want to complicate it, that in the end, some tell me to buy this, sell the other, and some, I don't even tell you, they put things in graphics. If you want, I'll speak to you in technical jargon. I say, the share is overvalued, it's overbought by the stochastic, that has a downward crossing of the average. The exponential average crosses upwards, the 90 with the 200. At the same time, the MAC has broken upwards, while the RSI is diverging downwards. And the bands, the Bollingers instead of the Bollinger Brands. You'd have to call them Bollingers, right? Well, if you want me to start talking nonsense, well, you have to keep the chart simple. You just need the price, and that's all. Everything else is just some nonsense that some of them out there like to invent. And it's worthless because it doesn't predict anything. So the fact that something is overbought, okay, Tesla at 40 was overbought, but it's gone up to 400. So, what do? I don't buy it, because an indicator tells me not to, but it's all much simpler. If it goes this way, normally it will continue, and if it goes that way, the same, it will continue. The thing that I can't do is to see a share that goes 10, 9, 8 and say, it'll change now. Now, right now, the moment I buy, it'll change. It's changing. No, it's not going to happen. It's much simpler. Hell, grab a share that's going up and continues going up. Okay, let's play now. Conscious against unconscious, so you can see who always wins the battle. So here, I don't want us to work with the conscious mind. Example, I'm going to hide this card. Here, I promise you guys, I'm going to hide it here, behind. I mean, we all know exactly what'll happen. We all know exactly what we have to do. We all know that we mustn't smoke, and many of us smoke. We all know that we mustn't drink, and many drink. We all know we shouldn't take drugs, and many take drugs. In other words, our mind knows what to do, but sometimes it doesn't do it. We know that we must eat healthy, and then we pig out till we're sick. The same thing happens when we go to driving school. When we go to driving school, the instructor tells us, press the clutch, the pedal on the left, shift the gear like this, let the clutch out bit by bit. At the same time, gently accelerate with the pedal on the right. Check the mirror, check no one is coming. Keep moving out, joining the lane. The moment you've fully released, press it again and into second. That's straight back. And you say, hey, all at the same time? And he says, yes. And you say, every day? And he says, yes. The question is, I've had to learn it consciously until it's an unconscious habit. And unconsciously, it's now automatic. And when it's automatic, you don't have a problem because many of you will have come here by car. And many, you wouldn't be able to tell me, I've come this way or that way. Because we put on automatic pilot. We leave it to the unconscious. We trust totally in the unconscious and we go around thinking other things. But look, now I'll show you the card. I'll take it out and I'll hide it here. The trick is as follows. I need you to not look at this hand. Look at it now. Last chance. See how simple it is. I take out a card, I hide it here behind, and you don't look at this hand. Is everyone clear what you have to do? Everyone? Let's see if you can do it. Come on, let's go. No, I want it here. The last time I tell you, no looking at this hand. Come on, let's do it. And you go. I looked but couldn't help it, right? The issue is that we can't control it. So our mind does what it wants. You don't control breathing. You don't control walking. You learned it, and that's it. Sometimes you trip over, okay, but you don't go thinking left, right. No. So what's happening? So we sometimes know what we need to do, but we're not able to do it. So be careful in the stock market. And this is very important, because I'm sorry that I have to tell you this, but if you want to win on the stock market, you have to be a robot. You have to leave the person outside. You have to leave feelings outside. It's no use. I'm happy, I'm upset, I'm motivated, I'm not motivated. No, I'm a robot. If it's time to buy, I buy. If it's time to sell, I sell. If it's time to buy at 37, I buy at 37. If it's time to raise the stock to 951, I raise it to 951. If in 15 days it's time to raise the stock to 973, I raise it to 973. Whether I like it or not. You have to be a machine. You have to be a robot. You can't think. You don't need to think. What really surprises me is that there are lots of people in the world of the stock market that open accounts without any previous knowledge. Normally with American brokers, you have to do a test for them to open you an account. A trap test, I must say, because they ask you a question. Which is the right answer? A, B, or C? A, no, it's not A. B, no, it's not B either. So C, next one. And they let you in. But they forced you to learn 25 things. But what's surprising is that here, if you bring money and an ID, you can operate on the stock market. And they let you operate to compete against the best investors in the world. Because listen, let's be honest. If we speak about chess and I have level 2, or any one of us here has level 2, would you bet money, 5,000 euros, that you're going to beat someone with level 9? No, you wouldn't. But on the stock market, you would. Unbelievable. You would do it on the stock market. Why would you? Can't you see you're investing against the best in the world? The best mathematicians, best physicists, best statisticians, the best in the world. And they want your money. I'm in there too. The best ones. We all want to win. And you know what? We don't care about the small timers. With investment funds, what we like is to take money from another investment fund. That's the height of pleasure. Because the small timers, sooner or later, lose. So I suggest you evaluate it from now on. It's worth investing in the stock market or not. Because it could be. It's not worth it. Because if you say, well, I find it difficult, it's complicated, knowing the rising companies and placing the stop every 15 days, well, I can't do it. Well, then don't invest. Because not investing is a very wise decision. But the problem is that people are prepared to lose 10 or 15,000 euros in the stock market, but not to pay 500 euros for a training course. Incredible, isn't it? All right, we'll move on to another magic trick that's very similar to the one I've done before. We're simply going to change a card's color. As you can see, all the cards here are blue, and here it goes. Hello, I'm Richard, and this is Sarah, and we're going to perform the amazing trick of the card that changes color, with this pack with the reverse face colored blue. The trick is very simple. I spread out the cards in front of Sarah and ask her to pull out a card. Let's see. I'll take this card. Sarah could have selected any of the cards from the pack, but she selected this one on the table. I'll now get her to reveal to us the card she selected. Okay, well, the card I selected is the 3 of diamonds. 3 of diamonds. Okay, a perfect choice. I put the card again in the middle of the pack. I spread the cards out face up on the table, and by snapping my fingers, the card that Sarah selected appears, that has the blue reverse face, which is normal. But the surprising thing is that all the other cards' reverse face is now red. And that is the amazing trick of the cards that change their color. Did anyone spot the trick? You've seen it. No. What do you think happened? While she was showing us the card, he took the pack and swapped. I agree with you. Has anyone seen anything else? Yes. Something else? No one? Well, guess what? It wasn't really a magic trick. Simply, it was a game where we were trying to discover what has happened here in our mind, and actually, they've pulled our leg. Because this is how the video finished. But the video began in the following way. Here, we have 4 things: his sweater, her sweater, the tablecloth, and curtain. So everything, absolutely everything has changed. So from now on, please, let's recognize that we're all idiots. And then, when we recognize it, we won't have a problem. Someone says, play the video again. Look, I'll play it to you again from another camera. Hello, I'm Richard and this is Sarah. And we're going to perform the amazing trick of the card that changes color. With this pack, with the reverse face colored blue. The trick is very simple. I spread out the cards in front of Sarah and ask her to pull out a card. Okay, I'll take this card. Sarah could have selected any of the cards from the pack, but she selected this one on the table. I'll now get her to reveal to us the card she selected. Okay, well, the card I selected is the 3 of diamonds. 3 of diamonds. Okay, a perfect choice. I put the card again in the middle of the pack. I spread the cards out face up on the table, and by snapping my fingers, the card that Sarah selected appears, that has the blue reverse face, which is normal. But the surprising thing is that all the other cards' reverse face is red. And that is the amazing trick of the cards that change their color. Lord, give me patience now, right? That's okay. We make mistakes. We're human, and that's totally fine. In fact, of every 3 shares we buy, 1 will be a mistake. If you stubbornly persist with this one, you'll lose 100%. However, if we're prepared to lose only this, with this share, and to win with these 2, then our numbers will change. But we're going to make mistakes. I won't give you an infallible solution. No way. I'll give you a solution that fails 1 out of 3 times, but we'll lose 2%. So now, when we win, let's see if we win 100, 200, or whatever. The frogs and the bucket of milk. Once upon a time, there were 2 frogs that for some strange reason fell into a bucket of milk. They began to try to reach the bottom, to bounce and jump out. But their efforts were in vain. There was too much milk for them to be able to touch the bottom. They tried and they tried, but try as they might, they couldn't succeed. To make it worse, a group of frogs arrived, and from the rim of the bucket they began to jeer at them. You'll never get out of there. You're going to die for sure. It's no use suffering. Just let yourself drown and it's over. One of the 2 frogs turned to his companion and said to him, "This is impossible. We'll never get out of here. Nobody can help us, and I don't want to carry on suffering." As soon as he had spoken, he ceased his efforts and sank. The other frog, however, saw the other frogs making their gestures, but did not want to throw in the towel. She continued for hours and hours, until somehow the milk began to curdle and turn thicker, and then the frog could push herself out and escape. Once out, the other frogs around the bucket couldn't believe it. "But friend, how did you manage to get out? We were telling you to throw in the towel and give up." "Really? Don't you know? I'm deaf." I saw you making gestures with your hands and thought you were encouraging me. And the moral is, don't let yourself be swayed by the opinions of others and fight to achieve your goals. In this course, we're not going to speak about hedging, so this course is useful for investing in bull markets and not only in Spain, but in the whole Eurozone. But you can talk about American shares or from Norway, from wherever, from Hong Kong, Australia. That looks like a good bet. You can say what you want. The only thing is, when you finish the course and you invest for now in the Eurozone, which is the one you're in, and you don't have to worry about hedging or anything like that. And you ask, why? Because you can buy a share at $100, and next year it's at $120. But you've lost money on the euro-dollar rate. So there's not just one risk variable, but more. So right now in the whole Eurozone, you've got 7,000 shares in Europe, in the Eurozone, to invest. But here, you can say what you want, because what I'll show you here works for all the graphs in the world. So, somebody said something, okay. I want you to say any share in the world. If you don't know of any, say another number, okay? Apple. Do you think Apple is going up or down? It's going up. What do others think? Is it going up or down? Are we seeing that Apple's growing? Are we seeing that it has no customers, that it has users or even fans? That you look at the brand, and every time there's a new product, you want it. Correct? That it sells for 400 or 500 euros more than the rest, and it's still selling. Do you know that 80% of Apple's profits come from products that didn't exist a year and a half ago? Is this adapting to change or not? It's adapting to change, isn't it? Do you know the latest? They presented this last week, the latest telephone is faster than any laptop computer that existed just 2 years ago. So imagine the incredible speed that the company is growing at. But you know, those with more years in the market used to say, when Steve Jobs dies, the company is finished. Did you hear that? And Steve Jobs died. And what happened to the company? It continued at a historic maximum. In fact, I'll put it on screen. What was your name? Alfonso. Okay, Alfonso. My question is this. Alfonso, here it was worth 4.89. Here was everybody winning here. Are you sure? Right, yes. We join them, we get in, we are buying here. And here is everyone winning. Here, when it's not worth 4, but 10 or 12. Just a sec. Here at 11. Is everyone winning here? See that? We'll buy it here and raise the stop every 15 days. And again, here. When it was worth 26. Is everyone winning? We have to buy it. Here, is everyone winning? And again, this month, at the beginning of the month, it was here. Is everyone winning? They're all winning. The conclusion is, I don't care what they say of Apple. I don't care if Apple is finished, that Xiaomi comes along and copies their products and sells them at a third of the price. I don't care that, whatever, Samsung. Anyone with Samsung here? Watch out, eh? I don't care what Samsung does. I don't care about anything. This is showing you if you're going up or going down. As simple as that. Take a child and ask him about it. What happens is that buying a share that goes up is very boring, very boring. The second person was, there, Gestamp, right. Let's open it. Here it is. Was Gestamp going up here? Was it at a maximum? Yes, today, is it at a maximum? Is everyone winning here? No, then we shouldn't be in, correct? We shouldn't be in. The third person was, where was it? Was it you? Have you chosen a share? Amazon. Amazon. Do you think Amazon is doing well or not? You haven't looked at it. But look at the graph. It was worth $1. But I want you to look here. Here, the company had 3 months on the market. Is it at historical maximums here? Correct, isn't it? This didn't exist. None of this existed. So all the winners are here. Right, then you have to be in, and the share jumps from a price of $1 to 100 in 2 years. Do you mean to tell me that in this 10,000%, you couldn't take out 300 or 500 or 1,000? And no one needs to come and give me information and tell me it's a buy. Because do you know what Amazon was doing in that time? It was selling books. Books. Now it brings fish to your door. Today, can we say that this company is a buy? Yes, do you want it? It'll be a bit franker. Do you think I need to know what it does? If I view this graph, I'd say the share is a buy, and I don't care what it does. And I don't care if it makes any money or not, because on top of that, this company spends everything. It spends everything. Investing in countries. It doesn't want to earn anything. There's a thing called PE ratio, and it shows how much money a company earns per share, okay? And so, for example, if a company earns €1 and the share is worth €10, it's supposed that if I buy it, in 10 years, I'd recover the investment. Is that clear? 100% of the investment. Okay, this one had, at one point, a PE ratio of 300. You'd need to live 300 years to get back the investment. So why give a damn about the PE ratio? If one day this company doesn't earn money, it doesn't earn. But one day, the share price will be €200, the day when it's finally everywhere, and it can go to Mars or the moon. It's the same as Coca-Cola. Can Coca-Cola expand? Okay, it can acquire other companies, but if it gains 5% a year, it's a star, because we're not going to stop drinking 8 or 9 liters a day of Coca-Cola. So when it's already so big, the Earth is small, eh? The Earth is finite, so that means companies can only grow to a limit. Another thing is that they invent things. Every day we're presented with more things. Now with telephones and watches, then it'll be a chip in the ear, whatever. So now you carry 3 things already. Obviously, they'll get the most out of the customer, right? But to grow and grow. Say a huge company, it's freaking difficult to grow. But this company still has a way to go. To deliver to the world in 2 hours. Have you said a number? No, you're the last then. Okay, we'll choose some more. Come on, let's do 2 more and take a break. A number 60. Who is it? A foreign share. Fluidra. Here, we have it here, okay? This share went public and fell, right? It floated at almost 6 and then dropped to 1.5. All right. This is very simple. This is like Bankia when it was listed, more or less. Is everybody winning here? No, you shouldn't be in. On the first day you say, we shouldn't be in, and eventually the share gets here. Is everybody winning here? Correct, you have to be in. The market. This is Spanish, isn't it? The Spanish market has fallen 10% in the last month and a half. It's fallen from 11,000 to 10,000. Okay. This share has gone up in the last 4 months by 50%. Like a sly cheater. Someone will say, who's cheater? It'll not be reported in the media or in the newspapers. You have to find it yourself and see it is only going up. And folks, I tell you, if someone here says, I have Fluidra shares, is it winning or losing? It's winning. They're all winning. So this nonsense about buying cheap dividend investing, the more it falls, the better. No, that's not our game. That's not our game. We're going to buy good companies. Why? Just let the others find the good ones. That's not our problem. I mean, we cannot analyze 120,000 shares in the world. Let others do that job. And then the 4,000 that are the good ones, well, then we decide the 4,000 that are at historic maximums. In Europe, 250 right now. That's it. So it's really as simple as that. And what we mustn't buy is the crap. Shares that are falling. And there are many. So, do you want to tell me? This is Banco Popular. It started to fall from 30 and something, yet we don't realize it's falling. We don't realize this one is falling. Yet someone may say, I'll see if it goes up. Ay, ay, ay. See if it goes up. But this is falling. Do you know how much the person who bought it at 28 lost? 100%. But if you bought at 14, do you think you lost less? You lost 100%. And the one who bought at 5, 100%. And who bought at 2, 100%. And who bought at 1, 100%. And who bought it the day before at 0.31? What have they lost? 100%. So we don't lose more by buying at a higher price. Another trick of the mind. Every time we buy, we might lose 100%. So that's why we always have to place stops. All right, next we're going to consider how much money do I invest in each share. Okay, this is called or known as position size. Relax, it's nothing to worry about. So let's write risk management by transaction. And then this, a little phrase that just says, I'll never risk more than 2% of my capital in a single transaction. The formula. Keep writing. The formula to calculate the number of shares to buy is as follows.